Let's ask the Trading Nation team. Ari Wald is technical analyst with Oppenheimer. Erin Gibbs is a portfolio manager with S&P Global. Let's get the fundamental side first. Erin, Seema outlined so well. I mean, do you have to believe effectively that the dollar will fall in order to be positive on emerging markets at this point?
I think there's two folds, particularly when we look at some of the emerging market ETFs. Another problem is that the overwhelming majority of these ETFs are actually Asia. So when you really have to look at currencies, look at how the dollar is going to trade with the won and well, South Korea and Taiwan. And in that case, I don't see any real weakening. And it's also about their economies. We're just not seeing the growth. We're just seeing further and further disappointments. And of course, stronger interest rates in the US. So particularly when you look at some of the MSCI emerging markets, it's really all about China. And until we see a turnaround in their growth story, I don't see any upside going forward.
All right, so you're negative on emerging markets overall. Ari, do you see the same thing in the charts?
Well, I guess it depends on my time horizon, Melissa. I think near term, the emerging markets ETF has become tactically attractive. I think the ETF has pulled back into support, and I think it's setting up for a counter trend rally. Now, by saying counter trend, I think there is some heightened risk here that should be considered. And I think to make that point, if you look at the long-term chart of the EEM ETF, it's been making lower highs since 2007. So we see this as a relatively weaker trend than, say, some of the U.S. stock markets, which are at all-time highs. Now, the weak tend to get weaker if the macro turns. That's not our case, however. We do think risk is returning to the market. We do think emerging markets are going to rally during that period. And with the higher lows that we've been making now since the start of the year, we think the ETF is set up for a move back to that resistance line at around $40. So tactically, we think it looks attractive.
All right, guys, diverging views on the EEM. Thanks a lot. Ari Wald and Erin Gibbs. Find more market insights at tradingnation.cnbc.com.
For an entry into an upside breakout, some traders use buy-stop limit orders placed above a resistance level. Unlike regular buy-stop limits turn into limit orders to buy when triggered, not market orders. Thus, if a stock closes below the stop price one day and then opens far above the limit price, the trader will not buy the stock.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.